Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Vena Ameliya, NPM 234120039, Accounting Class 23A, Taxation Subject. Okay, here I will explain about input tax and output tax. Let's discuss it straight away. Definisai input tax. Input tax is a tax paid or payable by taxable entrepreneurs, PKP, for purchases of goods and/or services carried out in the context of their business activities. This tax can be credited or refunded by PKP in the context of calculating the VAT payable. Example: if a business purchases raw materials with VAT, then the VAT paid at the time of purchase is input tax. Types of input tax. VAT on purchases of goods or services. Tax payable when PKP purchases goods or services from fellow PKP. VAT on imports of goods and services. Tax paid when goods or services are imported into Indonesia. This tax can also be credited by the PKP that imports the goods. Definisai output tax. Output tax is a tax payable or paid by PKP on the sale of goods and/or services in the context of its business activities. This tax must be collected by PKP from consumers and deposited into the state treasury. Example: if a business sells products with VAT, then the VAT paid by the buyer is output tax. Types of output tax. VAT on domestic supplies of goods/services. VAT charged on domestic sales of goods or services by PKP. VAT on export of goods/services. VAT charged on the delivery of exported goods or services. The rate is generally 0%, but is still recorded in the tax administration. Input tax and output tax are important parts of the value-added tax, VAT, system, which is regulated in Law No. 42 of 2009 concerning VAT and PPNBM. These two types of taxes play a role in the business cycle, especially for taxable entrepreneurs, PKP, who are required to collect, deposit, and report VAT. Example: a company, PT, then, the company sells the finished product to customers for IDR 400 million plus 11% VAT, IDR 44 million, a total of IDR 444 million. Do the math. 1. Creditable input tax. 2. Output tax that must be remitted to the state. 3. The amount that must be paid or returned to the company. Answer. 1. Input tax. Input tax is VAT paid when purchasing raw materials, namely IDR 27,500,000. 2. Output tax. Output tax is VAT levied on the sale of finished goods, namely IDR 44 million. 3. Calculations that must be remitted to the state. Output tax, IDR 44 million. Input tax, IDR 27,500,000. Taxes that must be remitted to the state, IDR 44 million. Output tax, IDR 27,500,000. Input tax equals IDR 16,500,000. Final answer. PTXYZ must deposit IDR 16,500,000 to the state. Conclusion. Input tax is VAT paid by PKP when purchasing goods or services and can be credited. Output tax is VAT collected by PKP when selling goods or services, which must be remitted to the state. The difference between the two determines the tax obligations that must be paid or returned. That is all, and thank you. Wassalamualaikum warahmatullahi wabarakatuh.